Hello and welcome everyone. Thank you for joining us today for part one of our three-part series of the rise of the smarter investor in a COVID-19 world. I am William Ferrand and I will be your host for today's presentation. Before we begin, we just have a couple of housekeeping items. So while everyone is muted, we do want this to be an interactive session. So we have left time at the end for questions and answers. If you have any questions, you can click on the Q&A widget at the bottom of your audience console during the webcast and feel free to submit your question. We'll get to as many of these questions as we can during the Q&A session. We're also going to be holding a couple of polls over the course of the webinar, which should pop up on screen for you. If your slides are stuck, please refresh your browser and hopefully things will then work. Finally, we will be sending you a recording of the webcast as well as a copy of today's slide deck following the presentation, so please stay tuned. So on today's webinar, we're going to start by giving you a bit of an update of what we've seen and what has been a quite extraordinary year. We're then going to look at what the differences are going to be between the firms that we view as thriving and will continue to thrive and those that are going to struggle given this new landscape, before finally covering the technology perspective. So I'm very, very fortunate today to be joined by two brilliant guests who are actually on holiday this week and have taken time off their holidays to join us. So I've got Thierry Groux and Stephen McGrath. Thierry is an associate partner with EY Financial Services Office in charge of EY's digital transformation solutions in the wealth management industry for EMEA. His focus is to support clients in the wealth and asset management industry in delivering business value through the application of technology. Thierry has over 13 years of experience in strategy, innovation, and transformation consulting. Stephen has worked in the financial services industry for more than 2 decades, gaining a deep understanding of content, initially as a financial journalist, and then as a content marketeer. In his current role as head of digital customer experience and engagement at trading firm IG, his aim is to close the digital customer experience gap by ensuring the right content is delivered to the right audience at the right time through use of data, analytics, and technology. So we've got two extremely well-placed people to talk you through things today. And I think I'll kick off by asking Stephen a question and probably start sort of high level so that we can then start digging in. Stephen, over the last 8 months or so, what are the sort of main trends that you've spotted and how have things changed for you at IG?
Hi, Will. Thanks for joining us, everyone. So we've had a very busy 8 months. I mean, ever since this COVID situation kicked off and the market volatility rose incredibly back in March and April, May, we saw a huge influx of new clients coming to the business. Those clients were wanting to trade both short term and invest for the long term, using multiple different products and ways of trading. And it was an interesting shift slightly in demographics. So we tend to cater for the slightly older audience, but what we saw during the whole COVID volatility was a slightly younger audience coming to the market. So sort of 35 to 44 age group demographic increased, whereas the 55 plus demographic decreased for us. And what that meant is we saw more people coming through digital channels than ever before. This is a group who are very savvy digital operators and wanting a very clean and strong online experience.
Okay, that's really interesting. Thank you. And Thierry, I guess you're sort of approaching things from a slightly different way, where you're working with a lot of these firms. So how have things sort of been different for you? What have some of your customers been asking, for you, and what are some of the challenges you've seen?
Good morning, everybody, and thanks for joining. So indeed, my viewpoint is more from a wealth management or asset manager or distributor side. So what we've seen, obviously, a rise in expectations from clients on what they want from the bank, a shift to bringing digitally the bank to the end investor. But that's not only a question of just bringing dashboards, bringing information. It's a question around how to really reinvent through digital the whole relationship model between the distributor of the bank and the investor. And that means new types of discussions, new type of relationships, new types of communication channels between the two, new ways of communicating, and as well internally, new ways of being proactive to push the right recommendation or narrative at the right moment through the right channel to the smart investor. So it's really new ways of building relationships between the bank and the clients that we have seen through the rise of digital and the current COVID situation. And that means really internally better leveraging on data, transforming operations, transforming how things are done, and even transforming how the investment proposals are done.
Okay, that's really interesting. And you've talked about how the relationships are changing and, using different channels. Do you mind expanding on that a bit and sort of, how do these, I guess, when we look at the old sort of quarterly connect over a lunch model, hasn't really been possible. How has that sort of changed, and how do you sort of see it going?
Well, what we've seen is that all the different channels that enables to have a touch point with the clients are being used. So actually, there's been a rise in the number of physical or direct interactions between the distributors, the wealth managers, and their clients. So if I take them one by one, the most obvious one is the Visio channel. So meetings are obviously not physical. They're through Zoom, through Skype, through Teams, and so on. So, but the way the channel is transformed is that it's a question of bringing to the relationship manager the right information around the client, around the recommendation, around the market situation that he needs to tell on a real-time basis to the end client. So a lot of wealth managers have transformed their relationship manager dashboards to push direct recommendations to a client. And so the RM obviously has a video of his clients, but on the right-hand side of his screen, for example, he sees real-time recommendations on what he needs to say. So that's the first channel. Then there's a direct chat channel. So what we've seen is that there's been a lot of fintechs who have sold their solution to wealth managers, where basically they add some security, some encryption on basic WhatsApp communications. So over the past years, all the wealth managers have been struggling in developing secured chat channels between them and the clients. Now everything is accelerated. WhatsApp has been accepted because there's the right level of encryption, of RG trail, of whatever you need to secure that direct chat with the client. What we've seen as well is, purely proactivity by pushing personalized recommendations or notifications to clients. So basically in the morning when you wake up, the client has the notifications, has what are the impact of the volatility of the changing markets and so on, and what are the recommendations and what he needs to change in terms of portfolio allocation, even on a DPM basis, because even on DPM, clients are willing to understand how the portfolio is evolving. So we've seen more and more push of personalized recommendations. And there are other indirect channels where also a lot of fintechs have emerged on personalizing news feeds to the clients. So clients on this dashboard would see, for example, the most relevant articles or reports he needs to read, which are relevant per his portfolio. So we're seeing a bit of everything, obviously, in terms of touch points and channels.
Okay, thank you very much. And Stephen, so going back to you, I guess in terms of looking at these channels and some of the you talked about different expectations that this newer generation that you've sort of seen increasing over COVID. You know, what are some of those extra expectations that they're sort of giving to you?
Yeah, I think, you know, a lot of them are more. They're less likely to want to phone you. You know, we have a model where we serve people online, but we also have as Thierry was describing, you know, where we have lots of teams also talking one-to-one clients. I think with this younger cohort, there is less wish to do that and more want to service themselves online, and in that way they want to be targeted with, you know, they want a personalized service. They want things that are relevant to them. They want them in real time, and they want everything, you know, around their portfolio, around their trading watch lists that is relevant to them. And I think, you know, that's becoming more important and more clear. So it's not. Yeah, it's not purely about serving to our teams on the phones, but also making sure that in the wider digital environment we're providing that personalized service.
Okay, thanks a lot. And I think that leads us quite nicely onto our first poll question for the audience to try to understand from the audience. So what is the biggest demand from your customers at the moment? Is it more data, better customer experience, better support? Is it easier onboarding? I mean, I'm sure it's going to be a bit of all of these, but, you know, please let us know what the sort of main trend has been out of these, and we'll probably give it 30 seconds or so to get some answers in. Okay, so let's start to have a look at what the answers have been. So, it's a pretty even split as we thought, but more data and a better customer experience seem to be the two sort of main themes. And I guess it fits in some of the things that we've been discussing, Stephen. So do you want to sort of expand, I guess, on what you see as one of the, how does data link in with customer experience, and, you know, what are some of the challenges that firms have in terms of customer experience, and, you know, how does that sort of define which firms are going to be the winners and losers in the long run?
Yeah, I mean, data is absolutely crucial to the whole thing. I mean, data is what builds personalized and tailored experiences. Without the ability to know what your customer has been doing, without the ability to be able to segment your customers, to be able to know them on an individual basis, you can't personalize on an individual basis. So having the data in the right place at the right time in real time is absolutely crucial too. And I've got a few slides really as we've explored the you know, the challenge of moving from a sort of very static and generic customer experience online to one that's personalized to the individual level. You know, we've talked to many an expert, many consultants, and got our own journey around this. And really, what we see is a experience gap between what brands are currently delivering and what consumers want. So, if we look at this slide here, brands typically at the moment delivering disconnected experiences. Internally, they have silo channels and silo technologies. And really, you know, it's customer service, digital experience is about achieving brand targets. data is not available in the right places at the right time, so you get decisions made without complete pictures. And internally, you may have siloed channels. So someone's running trading platforms, someone else is running customer support, someone else is running CRM, for example, and you get one-to-many experiences. Whereas, what customers want, they just see one brand. They don't see your internal structure. They want your focus on them. They want you to make mutual value decisions. And for everything about them to feed into their personalization. For them, they want consistency across the channels. It doesn't matter whether they're onboarding, they're coming into the platform, they're coming into service areas. It needs to be consistent, and they want a one-to-one experience. And the journey.
Sorry, how can you break down some of those silos to try and give that better experience?
I think you need to set yourself up with a structure that supports cross-journey data and technology. So, whether you can you structure in various ways, but at some point you need someone with responsibilities looking across customer journeys. You've got to make sure you're collecting data across all those customer journeys, and all that data is connected up and in the right place and linked to the customer. And you need to ensure that your whole sort of ethos is geared towards serving the needs of the customer, not just your business aims. Because if you serve the needs of your customer well, you should achieve your business aims. So it's changing that mindset too.
Okay, thanks. And I guess moving on, how do you sort of get from that, looking at that sort of one-to-many experience to the sort of one-to-one, more personalized experience?
Well, it goes really to looking at 6 key distinct areas. And so, it's about approach, it's about structure, it's about data, it's about technology, and at the end of it, it's about content as well. So, you need to switch your approach from just purely thinking about business targets to thinking about client-centric needs, which should then, as I say, drive your targets. It's about ensuring your structure, your internal systems support cross-journey personalization. It's ensuring you've got the data in the right place, all together, accessible, and in real time. It's about looking at your technology stack and ensuring all the pieces of the technology stack are there, whether that's, from data management through to decision engines that can, based on next best action, that can deliver the content based on client actions. You then need ideally some sort of machine learning capability, AI built in, if you're going to scale it. And you need the right content, and you need it to be organized, and you need it to be tagged.
No, that's incredibly interesting, and I think going to that, I really like the idea of the Simon-centric, the sort of personalized approach. I think that it's something we've sort of seen everywhere with Netflix, Amazon, and things like that, sort of suggesting what to buy next. I think it's really, really sort of logical and great sort of move forwards. And yeah, so you sort of talk about making sure that everything's tagged and linked together, and using machine learning. Sort of, how do you sort of deliver it to your customers?
It's you then need really what we call the decision engine, the brain, which is the piece of technology which is looking at your client actions and saying, okay, updated, based on that updated action, the most appropriate content to show that client is.
I think we might have lost Stephen. So maybe, is Stephen back? No. So maybe while we wait for Stephen to come back, he's put a great sort of curve of where to look at where businesses are on the maturity curve, and sort of looking at customer strategy. Is a business nascent, emerging, connected, multi-moment, and really sort of looking through that business curve. So it would be good to understand, where do you think your business is? Yet again, ask the audience, where do you think your business is on this curve? Let's give it 30 seconds or so again to understand where you are on this on the customer experience curve. Give it another few questions, and then we can look at the answers. Okay. So most people think they're merging. So I guess it shows that there's still a lot of work to do. It's a developing area. It's a very exciting time to be here, looking at this. So. Thierry, maybe we can come to you now. It would be good to understand, within the wealth management environment, we've just seen that a lot of customers, a lot of the people on this webinar think that, they still have a lot to do if they're sort of emerging. Where do you sort of see the wealth management environment, and, how has digitalization sort of changed over the course of COVID?
Yeah, well, the challenge is all the wealth managers have seen their margin pool reducing, right? But that's due to the fact that the revenue margins have really decreased by 20 or 25 basis points over the last decade. Plus, obviously, so there's a lot of cost pressure. Plus the fact that they cannot rely on AUM growth anymore through a volume effect to drive margin pool growth. So actually, and everything is more around digital to meet the new client expectations and so on, and we've talked about it. So we've seen a huge acceleration in the setup of new transformation programs which aim at really delivering their customer experience or delivering services differently through new operating models. And digital transformation is not anymore a question of launching new services, improving client experiences. Is really a question of ensuring operational efficiency and delivering business value really through more digital models, being on the top line side or bottom line. So we've seen some huge transformations around client experience, around operating models, internally and so on. We've seen we've seen a lot of outsourcing of different activities which are not critical for the end client. We've seen partnerships between different market players for wealth managers to be able to push different services at the right life moment to the right clients. So we've seen a huge shift towards more platform or ecosystem models. And obviously that's mean really transforming the ways of doing everything internally. So that's what you have seen. And then in terms of new models, it's all the banks are trying to really aggregate financial and non-financial services to be a live service provider to a client, even if it's a shift or a trend coming from retail, coming from Asia through the super apps model and so on, is something that we are increasingly seeing on the wealth management space. For example, there is a large Swiss bank which recently acquired a startup specialized on on real estate or on better identifying opportunities on real estate. Nothing to do purely from a financial basis, but it's really to answer some new needs around real estate. All of this remotely and so on. So that's first trend. And then the other trends are more on what I was talking about around how to transform the conversations or the proactivity between the wealth management and the bank. So yeah, four key focus on what we're seeing. So really everything around the client, we've talked about it. Redefining the investment proposition by being able to push to really personalize as well as far as possible the investment proposition to a client. Growth areas as well. We haven't talked yet here today about ESG, but huge trend that we've seen. So a lot of demand around ESG, a lot of questions around ESG, and it's a whole new model which needs to be built by the wealth managers. And I come back to what Steve was saying around data. Talking about ESG to clients is also pushing new kinds of data to clients, showing what the impact is, not in terms of financial, obviously, but in terms of really pure ESG impact, showing new kinds of reporting to the clients. Internally, that means being able to work data differently on an end-to-end basis to do ESG through new risk engines and so on. And there are other growth areas as well. And the fourth trend is what I was talking about pure operating model transformation.
Okay, thanks. And I think we'll come back to some of the operating model transformation, because I think that's a really interesting point. But Stephen, I think you're back now. In terms of the data, you getting new data requests. Thierry talked about ESG, but I can see that we've got sort of alt data and things like that covered. Are you getting more requests for new data types, or even the way data is presented as well?
Yeah, I think definitely we are, and I think there's more interest in people wanting to, customers wanting to research their own data, particularly around actually their trading performance. We've got people. We recently launched a new tool which allows customers to go in depth into their sort of trading and investing behavior and look at that, and education linked to it, personalized education that's linked to it, and we see huge demand for that sort of thing. So when you start presenting your data to their own data to customers, we find there's a real rich desire to want to explore that further and really start to understanding. So that's something I think as Thierry says, we're seeing new lines of interest opening up. ESG definitely is an emerging phase, but increasing interest around that, and others around certain sort of trading methods as well.
Okay, thanks a lot. And Thierry, I guess on the transformation of the operating model, I think scale and capability and reach is an interesting thing. But another thing I see you've put on there is talking about talent and culture. How does a company go about that, and what are some of the changes that you're seeing on that side, and sort of the potential positive impact that they'll have?
Well, indeed, it's the key issue to getting a transformation successful, right? So there have been a lot of questions like, okay, what should be the new role of a relationship manager? What should be the role of employees really working purely on internal operations and so on in a digital or optimized world? and so on. What should be a role of a portfolio manager building a portfolio using data and with AI techniques, which, well, basically in a full AI world would be completely automatic. Well, what I was saying is that getting transformation right is by as well embarking all these different stakeholders from day one within that transformation, and that means being able to co-create the vision of the new services with these stakeholders. So if I take them one by one, enough wealth managers have started to develop new services for the end clients or to transform the touch point channels with the clients. But the way some banks have done that is obviously there are some digital teams dedicated to building these services, but as a startup or standalone basis, they're involving the RMs, the front offices in the creation of these services, testing some assumptions, even testing some assumptions within clients. So it's a question of initiating a collaborative innovation mindset or culture within all their lines. Other examples, same thing on augmenting the investment processes, right? So it's not a question of totally replacing the role of the portfolio managers, obviously, but the way some asset managers are working is that they are building some new AI-based model aiming at answering pain points from the researchers or portfolio managers, and these are the end users of these new services. So when you show the added value of everything which is built, that's how you transform or you embark all these different stakeholders into new roles or new models. And when you get everything right, obviously, the end game is having the end client using these new services and getting them engaged and increasing their client satisfaction. And that's how you close the loop, because it's when you show that you're answering the key client expectations that the RMs know that they need to really transform the way they're communicating or the way their relationship with the end client is formed. And then internally, in terms of culture and so on, it's aligning everybody on that vision, starting to transform some of the key capabilities which are required, and sometimes it's capabilities which are far away from pure financial services. So that's where you have seen some banks, some asset managers hiring intensively some data managers, some data analysts who their core capability is data, right, or even development. And it's by combining all the traditional to new types of capabilities which transform a whole culture from inside. So key issue on getting the transformation right by transforming internally the culture, the mindset, and transforming as well the capabilities towards new ones.
Thanks, and that's interesting. The sort of the use of AI and of data analysts, etc. And Stephen, I guess you were sort of touching on it a bit during your presentation, but in terms of AI analytics, sentiment, things like that, using these to tailor the experience, etc. How do you see these sort of playing out?
Yeah, I think as you try to build scale in this area, you increasingly have to be able to use AI to allow technology itself to learn and adapt and deliver. I think it's a crucially important thing, and the data science team in our business, the data technologists have really, it's something we've expanded out a huge amount in the last few years because we realized that to be able to deliver the sort of personalization, the customer service segmentation, the real-time data needs requires that sort of level of support and needs. And I think Thierry's point, I think, is a very good one in terms of the operating model. It's not I don't see it as a complete shift to digital. There is a definite place for your traditional face-to-face contact, wealth management, and personal relationship manager, but those teams need to be empowered with the same data in real time that is powering your digital experiences.
I totally agree. I was talking more about transformation issues, but the way you get relationship managers, front office, or key stakeholders working on these techniques is bringing them the right data, bringing them the right recommendations. So I was talking at the beginning of our discussion about the new video channels, or way of interacting through video, pushing the right recommendation to a relationship manager to push him to have the right narrative in a real-time basis to the end client with whom he's communicating directly. You can only do that if you have the right data, if you manage the data on the right way, and you push high-quality data with high-level recommendations to the relationship manager. And that's really how you get to transform the ways of working and communicating between a distributor bank and its client.
Yeah, and I guess that's a really good point. You sort of want to give enough information to the end customers that they have as much information as they need, but the relationship manager still needs to be able to add that value, and having the right data will help with that. And on that, you actually talked at the beginning, Thierry, about some of the sort of RM dashboards and things like that for right recommendations. What are some of the sort of requests or some of the things that some of your customers are looking for in terms of those dashboards and linking data together? I know Stephen talked about sort of having data silos and things like that. It'd be good to understand, what some of the customers are trying to do on that front.
Yeah, well, indeed, totally aligned on the prerequisite with having the right data, the right quality of data, and managing those silos. But on the dashboards, the key issues is to really enable the relationship manager to really know or have everything he needs to know on the client, so history, profile, and so on, plus identifying what we call it, everybody calls it next best action, but really assessing what would need to be pushed to that client, or what would need to hear, to listen, and what should be the key questions that the RM should answer. And it's as well, in a very volatile world where it's difficult to anticipate everything, it's having the right narrative for the RM to push to his clients around new products or new views, and so on. Plus, sometimes we're seeing this on some dashboards, a direct chat link from the RM to different experts which are in the bank, and which are easier to contact in a remote world, by the way, as everybody is connected. But we're seeing a lot of modules in RM dashboards where the RM is able to contact an expert, a product manager, a fiscal expert, a tax expert, and so on a real-time basis to answer a question, or even sometimes to initiate a conversation with 3 people through video with the end client. And that's why as well we're seeing an acceleration in the setup of or the implementation of CRMs, which in wealth managers has to really better work that client data, aggregate that client data, and push in a really personalized view to the RM to again be in a 100% personalized world between the bank and the end client.
Okay, thanks a lot. And yeah, do ask questions. I haven't seen any questions come through on the chat yet. I guess, Stephen, is there anything you'd sort of like to add before we move on to the questions?
No, I don't think so. It'd be good to have some questions and see what we can answer.
Yes. Just give a few more seconds for any questions. No need to be shy while we've got Stephen and Thierry on the line. Okay, well, looks like we don't have any questions, which I'm guessing means that you've both done an excellent job in answering any questions. Here we go. Yes, we will be sending the slides and the recording through afterwards. So yeah, that was a question. But yeah, absolutely. Hopefully this means that you've answered all the questions. Thanks so much, Stephen, Thierry, for taking the time out and for your really, really interesting insights in what is a really exciting time, an exciting world, and with things changing, looking forward to see how it all plays out. We have got actually a question. What will be the ROA on the future model? So I'll let either one of you take that.
Thierry, do you want to take it, or shall I?
Yeah, but I'm sorry, I have a French answer by saying that we don't know, and actually I don't have a clear answer. Everyone, every market player is focusing now on business value, on having an ROI or ROA from these new digital initiatives coming from both top line and bottom line. However, we've not seen yet the key results from all of these digitizations models. So obviously it's efficiency, because you better push to a client when it needs to be pushed. You develop additional revenue streams by pushing new types of solutions or services. You increase client lifetime value. You increase share of wallet and so on. And on the other side, going to 100 paperless, going to more automated processes and so on, reduces costs, increases efficiency. The third key value lever on the business equation is the investment side, and that's where the most of the wealth managers are, and it's difficult to say what's the ROI behind that. But what we're saying is the huge amounts of all the different managers who are investing both on top line and bottom line digitization issues. So obviously the large banks and so on, HSBC, BNP Paribas, have communicated about several billions, but on the wealth management arms, it's double or triple digit transformation programs which are currently initiated, but no clear vision on what should be the target ROI yet.
Thank you.
Yeah, I was just going to add to that. I think, I've talked to peers at many different businesses who have struggled to build business cases to do this, and one of the suggestions has always been to start with a complete journey, one is valuable, build it out in a personalized way, and test and measure around that, and in terms of building a full ROI picture, I think Thierry is absolutely right. We're still in the phase where we are understanding it across the business, and the fact is, it can have a huge impact across everything you're doing. So actually breaking out what is the ROI for this specific piece of technology, or the specific change in structure or whatever is hard, but it's clear.
Sorry, I should have unmuted myself before saying that. We've had another couple of questions come through. Do you think that after COVID-19, the number of investors will be reduced?
No, I don't. I don't think so. I think we're not seeing the same level of new clients onboarding that we saw back in the first and second quarter, but it's still higher than it was. And I think the markets are going to remain volatile potentially, and I think there's lots and lots of interest.
And on the other hand, and we've sort of touched on it a bit, I guess, do you think traditional advisors will still be sought after, or do you think people are going to move more towards, self-directed and robo?
I mean, I think the demand for self-directed and robo is only going to continue growing, particularly as more and more of the younger audience is getting interested, and so much of their daily lives is about digital-only interactions. So I think inevitably so, but I still firmly believe that for companies who can get it right and ensure that their wealth managers and advisors have access to the right data and the ability to be able to personalize their conversations, there is a big place for that as well.
And Thierry, would you agree with that, or do you have a different view on it?
No, I totally agree on the two last answers. And the first one on the number of investors, I think on the more traditional wealth management side, there'll still be a slight increase of number of investors, plus a higher usage, or the investor will be more active in a volatile world, I guess. Plus, there's still the next gen trend and so on, which is still a let's say demographic one. So we'll see that trend coming. Plus, we'll continue to see a rise in all the clients from the mass affluent segment, right? So obviously now people are more into a observation basis, but we'll see more models where retail investment plus retirement plus more long-term investments will be proposed by banks, distributors, and so on. So I think there'll continue to be a trend in growing AUM, or growing number of clients. And by the way, the mass affluent segment is a more profitable one, and we're seeing all the different market players going into that space, offering new kinds of investment schemes, long-term investment schemes. ESG also will help a lot on bringing people from save to invest, and then from invest to invest in a digital world. And that's my answer mostly on the second question around robo-advisory and new models. I think on mass affluent, or the low base of the market, there'll still be some new expectations in building more personalized portfolios. The whole retirement and pensions trend as well will be one through simplifying, bringing pedagogy, bringing new types of narratives to help a mass affluent client, or even an individual building a purely personalized portfolio. And same thing on the lower end of the market. I think to continue to be proactive, real time, and so on, everything will need to be leveraged on digital portfolio allocation model. So we can call this robo-advisory wealth, but as everything is turning about more real time, doing stuff with more data, quicker, and in a better way, all this will continue to accelerate.
Thanks. And we actually have one last question, which I think is probably more for you, Thierry, which is, what would be a quick win for companies in emerging markets to scale up the relationship management offering that you've been discussing?
I guess it would be a simple model, but oriented around goal-based planning, or oriented around goals. What we're seeing is a lot of usage or client engagement being created by having a discussion around long-term goals. So being retirement, being buying a home, buying a secondary home, and so on. So being able to initiate the discussion around a goal plan, and then bringing different services, financial or not, to ensure that goal can be a quick model to initiate a client engagement. So if I can give two examples. For example, I was talking about buying home or investing in real estate from a pure wealth management perspective. So if that is a goal, obviously There's the real estate financial plan, but there's also being able to provide all the tax issues, the expertise around real estate investments. There's also issues around bringing the right services, which are not financial, to follow up an investment in a newly built real estate property, for example. That was the example of a large Swiss bank I was talking about. So that's the first example. Second example is building retirement proposals on a long-term basis by adding some pedagogy, by adding some coaching, by adding some issues around aging, and so on. So I think the quick win is simplified experiences, but on client journeys, which are really on an end-to-end basis, by being able to bring the 2 or 3 different services which are required for a goal. And that means being able to operate in a more platform or ecosystem model.
Great. Well, thanks a lot. I think that's the last of the questions. So thank you so much, everyone, for joining, and a huge thank you to Stephen and Thierry, who've been incredibly insightful. And just to remind you, we will be having the second part of the 3-part series on the 10th of November. It won't be next week because of the US elections, but it will be the week after. So please do tune in for that. And as I said, we'll be sharing the slides and recording after this. A huge thank you to Thierry and Stephen. And yes, have a good day. This is the end of the webcast. Thank you.
Thank you.